Good morning, good afternoon, and good evening, traders from across the globe. Thank you for tuning in to my 2410th edition of Short-Term Trading live with Oscar Carboni. All right, traders, thanks for tuning in. Let's get moving right away. There's a lot of risk in this game. Please know that risk. Never trade without stops. Put them in first, and know that no matter what you're trading, ETFs, if you're trading from cross currencies to euro currencies to cryptocurrencies to futures and stocks and options, it's all risky. So put your stops in and know that. Now let's get moving. For trading on 5/10/2022, what's on this board? Traders, see what's these little bars right here that I painfully constructed before this video? These are a representation, if you will, of the OMNI S&P daily bar chart. The OMNI S&P went up for a long time, and on January 4th, 2022, this year, this January, we put the highest high in the S&P has ever traded. On January 5th, I came out with a video to explain that this market is now going to go into an adjustment. And look at how the bars turned red from the night of that video explanation. Now, you can go to my YouTube channel anytime you want, youtube.com/futures analysts. Check the date 105/2022, and you will see an explanation explaining to you, I know we're here at the highs, but now the market has to adjust because they're going to raise interest rates. And I explained the whole thing, where it's going to go, why, and how. Here we are. Now the market is actually doing that. Remember, kids, if you've got a train speeding down a track, barreling down a track for 12 years, and then you decide to put the brakes on. Biden did it by making crude oil go crazy, and then, of course, the Fed did it by raising interest rates. That's the same thing as putting the brakes on. If you put the brakes on, the reason you did that was to slow the train down, right? So it all fits and it all makes sense, and people are starting to go, oh my God, Oscar, what's going on? I can't believe it, the world's coming to an end. And it is not. They purposely hit the brakes. I told you it was going to happen on this date. Then it started to happen. I know I'm not wrong. You don't need to guess about this. This is what's going on. So now they have started to slow the market down. And what I'm here to tell you is, in last night's video and several weeks ago's video, I gave out targets in the Russell 2000 on the downside for a shorter term, next couple of weeks. If it gets there right away, I don't know, but short term. Those targets we're getting closer to, and I stick to those targets, and yes, the market is going down. At the same time, let me tell you, the reason why they put the brakes on was to slow down the economy a little bit, mop up some liquidity. It wasn't on purpose that they want to crash the stock market. That's not this. That's not what raising rates is about. It's about slowing down the train a little bit, or take us down to a spot where when they stop raising rates, we get to go back up again, but at least we're not going up from a skyrocket point already. We're going up after a pullback. That's probably what they're doing, because I can tell you right now, looking at everything I've seen, when they're done raising rates, this market's going to go up so high, so far, so fast, you'll pass the moon and start heading to Mars. There'll be no way to stop it when they stop raising rates, because it's the only reason why it started going down, right? They started raising rates as we expected. It made the market adjust. So now that it has adjusted, if they ever reach a point where they say we're not raising rates, or maybe we'll hold off, this market will just go, pew, because, okay, here's a small, believe it or not, I'm going to say these words. Here's a small entity and a small amount of cash sitting on the sidelines with just one company. Warren Buffett has $117 billion just sitting on the sidelines. What should I do with it? That is small compared to the money sitting on the sidelines waiting for when this thing finally finishes catching its breath. They're going to come in and buy the crap out of it. So, but that's not yet. We're in the cycle of the Fed mopping up liquidity. Yes, the market has to come off, but the Fed raising rates is taking its desired effect on our markets, as we just spoke about, and on our raw materials industry. And that is the biggest part of this game. We can knock down the raw materials. We start to take that inflation down. we know that supply and demand will take the inflation down on its own. What does that mean? Yeah, we can't get these products right now, and it's inflationary. This is called find a need and fill it, America. That's what we do. You know what I'm saying? No one's going to sit around going, yeah, you know, we can't get these pens nowhere. There's nowhere to get them. I'm not going to get them and invent them and then make them in the factory and sell them. Not me. We're just going to let people who need them not get them. That's it. No more pens. It's over. You know what I'm saying? It's not going to be that way. This country is, and you know, the biggest tenet of capitalism is find a need and fill it. So that supply and demand, that is going to work itself out. If we can get the price of raw materials to start to come down a little bit, well, that's what we need. And I'm here to show you the charts right now to prove that the Fed raising interest rates is absolutely taking its desired effect on our markets and on the raw materials markets. Traders, if you need trading recommendations, come to my site and see me. I'll shoot them out in every direction to you during the day and night. Barring that, remember two things. One, we're going to look at some killer charts in just a minute, and you want to see this chart segment, don't walk away. And two, say this to yourselves when you're in trades, because I'm sure it's going to help you. It helps many people around the world. Stop soar in. Emotions are out. Now, traders, sit tight and watch me show you exactly what this says right here come true before your eyes. Traders, the Russell 2000 weekly bar chart, and yes, projections remain valid. Now, the projections are down here. My first set of projections came out when we were up here, and those projections were for right about here. So we've made that mark, and now new projections are out, and these are them. This is where we were right here when I made the projections for this, and this is what's happened so far. I mean, wow, right? Right on the money so far. Scary, right? Heading down to those projections, Oscar, what's going to happen? Is this the end of the world? Well, I don't know, but I think the reason why the Fed is knocking the markets down is to tame inflation. And how do you tame inflation? You make sure that when you raise rates, it takes its desired effect. What does that mean? The Fed raised rates on this day, and coffee finally stopped going up. Boom, now we're in a downward channel. Coffee is used everywhere. And in all honesty, it's just the Head and Shoulders that was formed right around the time they're going to raise rates anyway. And it's working, so the market knows, right? The Head and Shoulders forms, the formation comes out first, the news comes out in the chart first. Boom, the Fed raises rates. The idea is to try to knock things down a little, and the first thing you see is something that gets used all over the world every day starts getting cheaper in price. Sugar, the Fed raises rates. Shoulder, head, shoulder, bearish Head and Shoulders formation, drops below the 50-bar moving average, starting to tank. Here is where it should go. When did they raise rates? Right here. You had a few more days, a week higher, and then that was it. Top came in. Now, the day they raise rates doesn't top out the market. It has to digest, which it did, and down we started to go. So, coffee down, sugar down, two things that are used all over this planet every day. Copper, industrial. Fed raises rates. Copper has its final halo. That's about it. Boom, 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 down we go. So, down below the 50-bar moving average. When Fed raises rates, it has its last hurrah, and down we go. Fed raising rates. The rate rises are beginning to take their desired effect. I mean, it's doing what the Fed hoped it would do, and I'm thankful to see this. What else is out there? Platinum, another industrial usage, right? Boom, well, look what happens. Fed raises rates, and boom, right into a tailspin we start to go. You can see it's defined with this channel, and below the beloved 50-bar moving average. There's a theme here, kids. Are you seeing it? Soy meal. Now, soybean meal, whether you know it or not, soybean, soy meal, this stuff is used in industry all over the planet. Some of it is used in car tires. It's all over. It's in plastics. So what happens? The Fed raises rates on this day, which, by the way, is March 16th of 2022. and you put in your last hurrah. That was it. The formation already formed. This formation doesn't worry me with only two weird bars coming out of it. That's still a shoulder, head, shoulder, and look at the tailspin. I am telling you right now, the Fed mopping up its liquidity is taking its desired effect on our markets. And you know what? Bravo, Fed, this is what we need. This way it'll make this drop in the stock market last for a shorter period of time. What's next? Look at wheat. I'm all over the place, right? I'm just pulling random charts. Wheat in the middle of a war zone. The place being bombed by Russia grows wheat. And what happens? We raise rates on this day, and immediately a bear flag is formed. You can see that bear flag. It's right before your eyes, right? Boom, boom, boom. And we're probably going to end up working our way through it. Now, this is susceptible to anything. It's in the middle of a war zone, but just showing you the effect of interest rates on just about everything that was getting expensive, and that's what we need to do. Fed, mop up the liquidity, slow this thing down for us, and then our markets can return to glory. Palladium. What's palladium used in? Catalytic converters in trucks and cars. It's used in batteries. It's used in all kinds of stuff. And so it's industrial. What happens? The Fed raises rates, and it immediately finishes off what it started, which is the big bear flag. Below the 50, and to be honest with you, this is just another setup. And all of this started setting up right before the Fed made their announcements. Just another big head and shoulders, but the flag's more prominent. We'll go with the flag. And I'm just trying to point out to you that from industrial usage to farms to everything in between, the Fed raising rates is beginning to take its desired effect on our stock market especially. And now look at this one, traders. Remember how bad things were when lumber was going through the roof? Look at all these limit up days, limit up, through the roof, right? We were all the way up here, $1,200 lumber up here. And look what happens. The Fed raises rates, and for the first time in a long time, what do? We go into some sort of a bearish channel. Thank the Lord. There it is. Now, this is starting to prove that when it gets anywhere near the top of this channel and the 50-bar moving average, that it cracks right back down, and that's what's happening now. Cheaper lumber is absolutely going to help everything when it comes to real estate and building and you name it, and it will help to take inflation down slowly. Right? It built up for a long time, 12 years it built up. It's not going away tomorrow, but an indication that the Fed's work is starting to take its desired effect. Traders, I hope that helps. It's not going to start tomorrow, but what the Fed is doing is starting to work, and this down move will not last all that long. Stay tuned, and I'll keep you apprised of the next big move coming.